Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. It's Friday. It's been a volatile week. The market's going to be closing for 3 days. It's closed on Monday. What people are going to do, they're going to be very nervous about taking positions home for the weekend. So I expect we'll see more pressure on the equity markets and more upward pressure on the precious metal markets. So let's take a look at, this is S&P 500. It's the cash market, and what we're looking at right now is the situation where we went back in 2009. This is the low that was seen in 2009, and this is the high that was seen last year. Pulling back on the Fibonacci retracement levels, we can see that the 38% level is 1579. The 50% level is 1408. So I'm looking for this market to get down to the 1400 level, possibly even lower than that. So we'll have to see what happens. But generally speaking, this has been a very long bull market, 6 years in the making, and this is the first reflection point. And I think we'll see this market begin to come down. Bear markets haven't been seen for a long time. Going down a couple of weeks or a couple of quarters is not a bear market. Bear markets can last 6 months, 6 years. It all depends on the conditions. So let's move on. This is the euro dollar. You can see I'm going to get closer in on this one. And we're going to go to, let's say, just 3 months. And you can see this actually doing well. It's trying to make it up. But if you look at our trade triangles, they're not so good. Especially on the weeklies down, the monthlies down, and the dailies up. But that's not good enough. We need to have the weekly in a green mode. This is gold spot. And what I like about gold right now is that people are beginning to invest in gold. You can see we've had a very nice base. We've had the breakout on the upside right here. And if you look at the RSI line, you can see all the way back here, it was flat, 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 flat. We had a perfect pullback to the 50 line support, bounced back up. I would say if we close towards the highs of the day, that's going to be a very, very good sign for gold next week. This is the Dow. I'm going to look at a longer term maximum picture. And here you have, let's just do a line chart. Take all of our, and you can see here, even on the Dow, here's how the Dow looks, basically with the 38% retracement down to 13,789. 50 is 12,387. It looks to me that this market's going to be on the defensive. We've had a 6-year bull market, and bull markets eventually come to a close, and maybe we came to a close making the highs in 2015. So let's move on. Same picture in the NASDAQ composite. We would expect to see these levels hit 38.2%, which is 3,681, even the 50% level, which is 3,211. This is a defensive move. I think we've had a 6-year bull market, much like the Dow and the S&P 500, and I think we're headed lower. This is crude oil. You can see a massive move down in crude oil. We're below the 30 level, which we expected. We're looking for 28 to 30 to be some sort of a base. We'll have to see how that plays out, but generally speaking, this market's still on the defensive, and for some reason, the market has cut, the indexes and stocks are coupled to crude oil. So when crude oil starts going up, then you'll probably see some recovery in the indexes and stocks. This is GLD. This is the ETF that tracks gold very, very closely. And let's get closer in on this. Let's just do a 3-month chart. And you can see there again, there's the nice base breaking over the 50 line on the RSI. Tested it yesterday. Boom, up today. Looks good to us, and it looks like if we put our trade triangles in, you'll see that we only have the monthly that's down, but generally speaking, we watch the weekly and the daily. That's how we trade gold. Look at the gold rules under the World Cup portfolio. Hey, I'm Adam Hewison. We've covered a lot of markets, but Monday we're closed, so just be careful going into the close today. I think it could be very, very volatile. Have a great weekend, everybody. I'll see you on Tuesday.